Welcome to The Explainer. Today, we are tackling the absolute explosion of money pouring into artificial intelligence. Seriously, it's like a gold rush, but on a scale that makes your head spin. We're talking trillions of dollars. And all this cash has basically split Wall Street and Silicon Valley right down the middle. They're all asking the same trillion-dollar question. Are we watching a true revolution unfold, or is this just the biggest financial bubble in history getting ready to pop? Let's get into it. Okay, so the trillion-dollar question. To even begin to understand this debate, you've got to wrap your head around the sheer mind-boggling scale of the money and, frankly, the ambition that's being thrown at AI right now. So get this, $7 trillion. That's the number that OpenAI CEO Sam Altman was reportedly floating for just one project, a project to build new chip factories. I mean, we're not even talking about billions anymore. The conversation has literally jumped to trillions. And, it's not just us saying it. You've got veteran tech investors, guys like Roger McNamee, basically sounding the alarm. He's looking at these numbers and saying, whoa, this is bigger than every other tech bubble combined. He's saying the amount of sheer capital being spent is unlike anything we have ever seen. Not even the dot-com boom comes close. All right, so now for the bull case. What could possibly justify spending this kind of money? Well, it all comes down to one big, audacious bet. The creation of artificial general intelligence, AGI. Yeah, so the argument from the bulls, the optimists, is that this isn't about just making a slightly better chatbot or a cooler photo app. No. This is about building the fundamental infrastructure for a technology that could completely rewrite the global economy. We're talking about creating systems that can do pretty much any valuable job better than a human can. And you hear people like Sam Altman say this a lot. He's basically arguing that our brains, they're just not built to understand exponential growth. We think in straight lines, but AI is moving on a curve that's shooting straight up. And if you believe in that curve, if you trust the exponential, then these huge investments, they're not crazy. They're absolutely necessary. So what's the prize at the end of all this? How about adding an extra 10% to the entire global economy in just a few years? That's what the believers are predicting. I mean, if you get a return like that, then spending a few $1 trillion today, well, it starts to look like the bargain of the century. And that urgency is why you're hearing this phrase pop up, wartime mobilization. Think about it. This isn't just another business cycle. People are treating this like the race to build the entire electrical grid a century ago. It's a massive, critical, all-hands-on-deck effort to build the infrastructure of tomorrow and damn the immediate costs. Okay, but for every optimist, there's a skeptic. And this brings us to the bear case. Is this whole thing just a house of cards? The argument here zeroes in on one really uncomfortable fact. This massive disconnect between the money being spent and the actual profits coming in. So just take a look at this chart. It's showing you the valuation, the price-to-earnings ratio of the biggest tech stocks today. And if you compare it to the dot-com era, well, look at that bar on the far right. We're not just near the peak of the 1999 bubble. We've blown right past it. And for anyone who was around back then, that is a huge, flashing red light. And you have guys like Harris Cooperman, seasoned investors who have seen bubbles come and go, basically saying, look, I've been through this before. This has all the hallmarks of a speculative mania, the kind where the hype itself becomes the reason to invest, completely detached from the actual financial numbers. And this right here, this chart shows you the core of the problem. On one side, you've got the actual money the AI industry is making right now, somewhere around, $20 billion a year? But on the other side, to justify all the money being spent on building this stuff, analysts say the industry needs to be making over $1 trillion a year. That giant chasm between those two numbers, that's the entire bear case in a nutshell. Here's another really smart point the bears are making. Think back to the dot-com bubble. The big investment then was in fiber-optic cables. Even after the bubble burst, those cables were still in the ground, still useful for years. But today, the main asset is the AI chip. And these things lose value incredibly fast. A chip that's cutting edge today is basically an old car in a year or two. So companies are spending billions on assets that are depreciating at an insane rate. All right, so this brings us to one of the weirdest parts of this whole story, something the bears are really worried about. It's this phenomenon called circular funding, and it might be the thing that's hiding that huge financial gap we just talked about. Okay, so check this out. It's like an AI carousel. It works like this. First, a big tech company invests, say, $1 billion into an AI startup. Step 2, the startup immediately takes that $1 billion and gives it right back to the big tech company to pay for cloud services. Step 3, the big tech company books that billion as new revenue, which then justifies them spending billions on more AI chips. And finally, the chipmaker's stock goes through the roof, which makes the whole thing look like a massive success. It's a perfect, self-contained loop. So, depending on who you ask, this is either strategic interdependence, which is the positive spin, right? A smart way to build out the whole ecosystem. Or it's something called reflexivity. And that's just a fancy word for a feedback loop where the story of growth creates its own reality, where valuations go up because everyone believes valuations are going up. So the big question is any new money actually being made here? Or is the industry just playing a giant game of hot potato with the same pile of cash? So, the verdict. We've got the bull case, a world-changing technology. And the bear case, a speculative, circular house of cards. So where does that leave us? Is this thing gonna pop? Well, the general consensus from a lot of the big players like Goldman Sachs is maybe not. They're saying, look, while there's definitely some froth, some speculative craziness, this isn't a carbon copy of the dot-com bubble. It's a bit more complicated than that. And this table really shows you the key difference. Back in the dot-com era, you had companies built purely on hope and hype. Most of them didn't make any money. But today, the giants at the center of the AI boom, they are absolute cash machines. They generate massive profits, they buy back their own stock, they pay dividends. Their financial footing is just on a completely different planet compared to the companies of 1999. So maybe the real key here is to separate two things in your mind. You can believe 100% that AI as a technology is revolutionary and will change everything. And at the exact same time, you can be really, really worried about the crazy financial speculation that's happening all around it. Both things can be true. Because look, the technology is real, it's here to stay. But history has a lesson for us. The internet didn't disappear after the dot-com bubble burst, right? The technology survived and thrived. But a lot of the companies that were the titans of that era, they vanished. So the real question isn't if AI will change the world, it's when the financial music stops. Who is going to be left holding the bag?